Good morning, everybody. Well, I'm ready, TJ. Monday, let's do it. Well, we ended last week with a relatively high probability pattern for a bounce. I don't think it's going to be much more than that. Time will tell. We have to see how far it can retrace between that prior pivot high. Need charts here. I always forget the charts. All right. There we go. All right. So, as we all know, prices topped out here at the beginning of September. We were expecting some type of corrective price action just because of seasonality. That was just the thought. Then we wait to see if it actually happens. And it happened. Prices broke support and they rallied right up into an obvious, excuse me, area where there'd be a turn. And for good measure, it poked up above here and created that topping tail, and down it went. So Friday, when it came down here, excuse me, and broke that low, the concept of what we call a greater than 100% retracement guides us to, hey, this is a probable point where prices should stabilize. And they did, not initially. They went down to around the 1030 reversal period, then began to chop around. And they came off of the low. And buyers stepped up aggressively again as they saw prices, dipped, and they stepped up and were able to hold on to that gain going into the close. So here we have a downtrend. We have a sell setup. We have a move down below the prior low, which typically is where you get stabilization and the potential for a counter trend turn, which we have a pretty healthy size bottoming tail green bar here. So now the question is, can it take out at least a prior day's high, right, Friday's high, and then how far up can it move? And here we're stuck with, the unknown. Right? My idea is that it probably doesn't go very far because we have this seasonal factor of October, and the way things typically play out is that it does make a low, sometime in September or the beginning of October, and then it rallies, and sometimes it's a significant rally. So even if it went up here, just by historical patterns, I don't think the selling is over because we have to have the October fun. And lots of puts and open interest. And look at all the premium, McGraw, is in the open interest to where it's like they believe it's going down, right? And I believe it is too. Maybe it ain't going down today necessarily, because the reaction that we saw on Friday, which was a bullish reaction, for the downside to go lower, I believe that has to dissipate, and it's going to take a little time. And if VIX rallies, we rally like Friday. Well, if the market rallies, it rallies. I don't know that the VIX is what, the tail that pulls the dog. I don't think so, but it's a piece of information that could, my point of view on information other than what we see on the chart, which is price. They are things that have correlations to price action that at times line up almost perfectly, and sometimes they don't. But they are information that gives us some extra confidence in that what we're seeing on the price. So the question is, well, why isn't price enough? Well, because there's so many unknowns. So we look for other information that is in alignment, that when we see it's in alignment, the probability is better. So, to the point of using the VIX, using the NYSE tick, using open interest, all of these things are information that we can utilize, but we have to draw the line. And I'm not saying this to you, McGraw, I'm saying it to many others that get so involved in every different indicator or every piece of information that it becomes brain damage. So a little bit of extra information to price can be a useful thing. So now we've got starting the day with an inside day. Markets are down here a bit. What is this? It's come off of the low. It was like, what, 100 and something before. So it's come off the low. There's some buying, down here at this little support area, bounced up, and it's just kind of hanging here. So is it an inside day? Is this just a little consolidation pre-market and then pushes up? So, right now, unless we see some kind of deep move all the way back down here, this pattern suggests it's going to push up, and, it might only push up to this area up here, or maybe a little bit above. But if we're sitting here talking tomorrow morning and looking at an inside day that's gone nowhere, or just whip back and forth within this range, that's going to tilt the bias a little bit more toward the bearish side, because Friday's action didn't follow through. And, in reality, just based on this pattern, prices should be opening up above this high, making it for maybe the chase to get on board for some kind of a rally to have followed through from Friday. And that's not happening. So is this a gift or is it a trap? Well, let's see how things unfold in the first, 10 or 15 minutes or so to see where they go. You can see the 5-minute chart, the bottoming action here. And of course, that's going to bring in buyers. And, right, look to the left, look at the pivot high. They sell into that. Now, does the demand pick up again? And do we start an upward move that eventually evolves into this coming higher and so forth, step by step, multiple time frame analysis. And let's not forget the fact that the weekly chart, this traded above the bottoming tail bars high and it failed. So this picture here is sort of on the edge of the cliff to a measured move down. This week it's all up to the bulls to negate last week's bar and see if it can push this back higher. Right now, way things are lined up here is some stabilization, maybe a move up into some resistance, and eventually rolling over, or whether it's from here or here, we don't know, and then a move lower. And probably why the open interest in those puts are so juicy. So, with SPX here, looking at those premiums, let's go to SPX here. And so it looks a little, that's NASDAQ, SPX, pretty whippy price action, but the same idea, sell setup came down, broke the low, reversed back up again. And so how far away can we go? Meaning, as we look at premiums below the market, where is there enough premium to sell that as a credit spread that we get to keep the money? Well, 42.65, is that doable today? There's a prior pivot low here. We talked about this last Friday. Obviously, it didn't go there. In the middle of the day, it kind of looked like, maybe it could, but, poke through 4,300 and pop back up again. So 40 through 65, it shouldn't go there today, even if this opening up here negates and breaks down through this low. I don't think it would get down here. And if it does, there's going to be buyers in this area. So up above 44.10, and if it gets through here, 44.10 should be a bunt, and it's just hanging up here right now. So I like to look at the spiders so I can see the price action, opened lower, 433, just hanging right here. So getting through here shouldn't be all that difficult. Now, if buyers can't get it above there, you see this little pullback, that was same thing we saw on the futures. If they can't get this thing turned around, and even if they need to jiggle this sideways until 10 o'clock or so, they should be able to get it above here. So 44.10 doesn't look, it looks doable. So I'm not interested in the call side, not unless this thing dropped and then, premium's not going to be there anyway. But You can assess that at the open. So there you have it. You got support down here, and then going, down below. You got to get through this low. It's got to travel through there, and then obviously you got another support there. So there's plenty of room for prices to move to make an assessment as to what's going on today, in addition to what we already know as to whether prices might get down there and whether at that point cut it loose and move on, if things get real ugly. All right. So, back to a little bit of the conversation about utilizing things other than price. Prices are going down. They're going down. We know that. We could look at the speed at which they're going down. But if we start seeing the NYSE tick is tagging minus 1,000 and it's staying, down below, say, minus 400 and going down to minus 800, and it's staying there for a half hour, 40 minutes, the selling is pretty steady. And going back to what McGraw said, if we were to see that and we see the VIX rising, and we could look at other intermarket relationships at that point to say, hey, sellers, they are in control here, and buyers just got their butts kicked after Friday's reversal, and we need to make some adjustments in our bias. All right, other markets, what are they doing? So Qs are a little extended here, and to the downside. They were the weaker. This is the 100 MA, if those that don't know. You see the pivot low here. There's another pivot low. I think the downside is limited. Maybe we're going to get just choppy price action, but we got the same pop up, the same pullback where buyers should want to step up again and try and get this thing back up to the pre-market high. And we'll just see what happens from there. Or whether we're just in for, one of these days that bore us to death, where it just chops around. And we're assessing what is right now, and then we'll just see where it all goes. The Russell, it held up better during this corrective price action here. Didn't go back down to the bottom of the base, but you can see how it is getting tighter. And this isn't meant to draw diagonal lines because they're meaningless. It's to show you a visual of the contraction in ranges where the pivot highs are getting lower, the pivot lows are getting higher. And this is about seeing that prices are reaching, or going to reach relatively soon, an inflection point where they're going to break one way or another. They've just been chopping sideways horizontally all year long. So choppy price action, the ranges are getting tighter, and we wait to see which way it goes. Intraday, we can trade that on any given day and decide which one is of these contracts are showing relative strength or relative weakness, which ones have a void. So typically the ones that are the weaker and the markets reach a turning point are the ones that are going to be more attractive to trade intraday, because it came down so hard, right? It creates the void, but it's got to get through this initial congestion here. So the weaker often becomes the one that shows relative strength, as the others that showed some relative strength, they don't have much upside or downside in this case. So they're better off to avoid. The Dow came down, broke the low, big move back up. And part of the problem here with some larger move today was the fact that these ranges are so wide, and sustainable large moves historically happen after a contraction in ranges and volatility. The expansion makes the turn, but the larger move comes after the contraction. And today just might be a contraction day of a wide day turning into a narrow range day. All right, Bitcoin is down a bit. It had a nice move off of the low here, tested that pivot low, and that the pivot high. It stalled. Again, look to the left. And oil, that's got to go to $80. We talked about this last week. It just has to be headed that way. Next round number, buying on the dip. Just, bullish trend. So why doubt it? Look at that move up there. Gold. And in the downtrend, I'm going to share in the room a video that Miro sent me over the weekend. It was very interesting on this stock that we were looking at a couple of weeks ago that fell apart. Some of you might be familiar with this. I don't know if Miro's here today, but I'll share it with you. Not Ryder, PLTR. I'll drop the link in the room, but this was looking great before the correction started. So interesting video. We'll show it to you later. Silver, downtrend, broke the low here, stabilization. And it's related to gold, by the way, this company. All right, what's left here? Transports acted well at the end of the week. Wide and whippy ranges, broke through the 200, up above, back down again. Well, more than that, McGraw. I'll drop it later after things settle down. It's interesting. So whatever corrective price action occurs, one of the things we'd like to see is that the transports hold up relatively well. And that would be a plus for the market in the end of your rally if they do that. Interest rates, we had that big spike up. And financials didn't spike up, but they didn't go down last week at everything else. So these higher rates are good for financials, but they really didn't help them move higher last week, but they held their own, meaning they pretty much ended the week where they started, just whipped around. So I think we're going to see more whippy price action and before we get a sustainable direction. And so don't be the frog in the blender, as we call it. All right, Dan will answer the answers on the YouTube questions on stocks. Good luck, guys.
Yeah, good morning, everyone. Yeah, we actually have a lot of put spread ideas. And here's one of them, for example. And I'm okay with every one of them because it's the scenario that we're dealing with the gap here today. Some days we say, you know what, the gap, excessive gap, and we, it's ruined all our trades. And today it's the scenario of, yeah, a little bit of gap down. If it takes out Friday's high, then they're good to go. Then it's negated. They have to, stabilize. And as Greg said, maybe 30-minute high. Yeah, Tesla has a nice gap here today, 797. So YouTube's asking, is that a put spread? Definitely. Friday's low. Yeah, I think the news is they had record deliveries. So yeah, that's a could turn out to be a directional too. So it's just a churning uptrend on a 15-minute chart. Looks higher. Oil looks higher. CF. It's too extended for us. We're going to be doing an MT live soon on using MAs. Look, the contraction here, the inflection point, the pull back here to support. That was a no-brainer entry with on support pattern, moving average alignment. And now it's not. Now you got the biggest volume, the biggest wide range bar. It's more of a short-term top here. It's going to take a while for that thing to either retrace or consolidate to get a low risk setup. But here, I'm going to write that one down to take a screenshot. That's beautiful moving average. My favorites, actually. 20 and the 50 curling into a rising 200 and a breakout and a retest. It's beautiful. All right, so our opens, I see Jets are gapping up here a little bit, so that's relative strength. Boeing, we have a put spread, that's doing fine. TGP, it's messy, but it's 1688. We'll keep an eye on that. OPGN 347. Same in sense of it's sloppy, but bullish gap. We'll come back to you. BTU, this was a beautiful, beautiful example of the MT live that we do called the turn, TURN. So it's a deep retracement, but it's on support. Went sideways for 2 weeks, bottoming tail, new low. And the next bar is a closing breakout with a price void. That's a beautiful turn right there. That had I seen that on Friday, we'd be long it right now. I didn't see it. A beautiful pattern. NVAX and Myrna getting hurt here again today. And I'm only guessing it's because of the success of Merck. Merck's gapping up here again. You know, their pill for older people once you're sick. It's been in the news. Golf Hotel. It's down a lot near support, gapping up. Could be a day trade. Kind of light volume here. Could be a day trade long. Facebook is getting whacked here. They had a 60-minute segment, whistleblower coming out and saying that they're, monkeying with the controls to get people addicted and to make more money. And does that surprise me? Heck no, of course they do that. I could have told you that before the whistleblower. So yeah, that's we had a put spread idea, but I canceled it. I'm not messing around with that until volatility slows down. And I think that whistle blowing woman is, I think, going to be in front of Congress tomorrow. I think I read. Akamai got a downgrade. I see one print here though. It's a mess. Harry, nice turn on Friday, bottoming tail, bullish range expansion, gapping up. Target's not real big though. X, I think, had positive mention in Barron's, but no pattern. Although the XLB is a nice retest pattern here. So this is worth watching. But we've been talking a lot about multiple time frames being out of whack. So yeah, the daily looks higher over Friday's high. And I know the month just started, but we got a bearish, lower high on the monthly with a price void. That's a bear 1, 2, 3 if October closes like that. So Tesla, yeah, ALK, another airline. We're going to try to sell some puts on that. EHTH. We traded this off this low and had a little swing trade and trail stopped a little bit. But now you got 4 bullish bars here in the top half of this real body with a price void. So that looks great over last week's high. FSLI, we're still short stock. I had a low alarm go off. Let me put that in a window. And this solar ETF. I mean, it's on support here, but now it's gapping down. There's no turn. So that's not convincing. Go Daddy. Nice turn on major support. Jacopo, CYTK. That sounds like a bio to me. Yeah. Yeah, as long as it's not a bio, I like it. It's not a textbook 1, 2, 3, but it's close enough. So yeah, I like it. If it's not a bio. CYTK. Ooh, that was loud. It is a bio. I just checked. So I don't mind day trading bios, but yeah, I don't like swinging them. All right, this hut. This is in the Bitcoin space. Little retest here, bullish gap, bottoming tail. So I like that over Friday's high. MTCR. Friday's high, I personally don't like the way it trades. Look at the 15-minute chart. All right, so our F line, tighten the stop. $40.72. Yeah, FSI looks great as a continuation here. Netflix is strong. That was a put spread idea. Yeah, Netflix, that was a very bullish pattern. Jeffries looks great. Had earnings on Friday, so 180 reversal breakout.